I think we have to zoom out. We have to zoom out a bit on NASDAQ because it's going to start moving like lightning. Otherwise, we're going to lose it. Yep. Hello. Yep. Hello. Wow, I think NASDAQ's about to blow through 400, isn't it? About to blow through it. Such a strange beast, ETH. There are times when you should never be aggressive.
Yeah.
And there are times when you must be aggressive. It's just one thing I've been looking at, and I've just about finalized, is a mechanical stop loss thing. So when I turn it on, I cannot. Yeah, so say I set it to 250 or 300, whatever it is, right? Then once I've set that on, I cannot widen my stop, or I cannot scale and increase my stop beyond that number, if you see what I mean. Because sometimes it's so tempting. So and then NASDAQ, as we know, can crash 100 points in about 2 hours, which it did today, or 300 points. I think I may start using it next week, but it's finished.
Yeah, I don't know if we're alive on that, but what I'm bad at that. I do fiddle, but I feel I'm allowed to fiddle. To play around with it and so forth, or dabble. I know I've used that word in the week. I think in the chat, dabble. So again, confuse people, dabble, fiddle. What I used to say with myself when I was doing my forex and early days in my forex trading was, think of it like going to the bookies when you bet on a horse. You've chosen the horse. You've chosen whether it's each way or it's a single just place to win, all those other permutations you get. You hand over your $20, $50 or whatever it is, and that's it. You can't go back to the screen and go, oh, sorry, I didn't want $50, I wanted $20. Oh, I didn't want it, I want it each way. No, exactly what you've just said, Moby, if you treat your trade like that, then that's it. You've launched it. Yeah. I know what you.
Yeah, I just like the mechanical idea. And just having a quick, I mean, obviously, if you have a few winning trades, your buffer increases, but you can always reset it. Your buffer changes to reset it. Trade. Yep. Hello.
Oh. Hello. Yeah, Kate. Good. So I've just checked my microphone. I suppose you can hear me, David and Moby.
Yes, sir.
Everything's
fine. Yes, we can.
Just let me start here. Welcome to our broadcast. Okay, ladies and gentlemen out there, welcome to our broadcast TTW and Friends, and I'm happy as every time to be with Moby and David today. That's a great pleasure for all of us here, first of us three here, to guide you through some nice, good ideas about trading and around trading and everything you might be interested in as well about trading. So let us know, place your question in the chat or use the opportunity to place your question on Discord, in our Discord room. We will be happy to answer that. And what's really, yeah, it's interesting and great to have your questions here, and we will answer it the next time in our next broadcast in the coming weeks. So be free, join us, enjoy and ask, and we will do our best to guide you based on our view on trading here, using TradeFinder, using ES or NQ as well. So today we will talk about trading, about NQ, and first of all I would like to start with a question which raised or came up last week. I think it was last week after our session, and I think it's a good way to start with a question here. And I think that the question, no, I know the question was meant to for David, and the question is, hey guys, I was listening to the TTW with Friends video from a few days ago on YouTube. In the beginning of the videos, you guys talked about checklist, and one of the things was average range for the session, and what I compared, and that compared compared, I lost the line here, to the last few days, and not talking a counter trade until it reaches a certain amount. Can you expand on that average range where you're talking about? So David, I think that's a good beginning just to answer this question which came up last week. And if you want, yes, I would like to ask you if you can, yes, answer this question.
Yeah, sure. No, well, good afternoon, good morning, good evening, everyone, and it's lovely to be having the chance to share some ideas with fellow friends and traders. Yeah, ATR, if I remember rightly, that goes back to some work done in the 80s, and if I say, I think it was made infamous or famous by those turtle traders, and they were using ATRs to look across commodities.
Toby Crabell is who you're thinking of, but yeah, and then they followed him.
Thank you, sir. Thank you. And they were using this very successfully across a range of assets that they were trading. And I have used ATR a fair bit in the past, particularly on forex, to gauge that volatility. And I know Moby will talk a lot more about that in a moment. I don't often now use ATR on my charts, but what I'm running in a sort of similar capacity is all those VWAP lines that you see very much on my time charts, my M1 ES and my M5 ES, and that's given me a sense of how the market has been, how tight those lines are, because that in itself is a range. And again, on my post, I'll often say, oh, it's looking quite tight overnight when I'm looking at the London morning and saying it's very tight, or words counter to that. That's then given me a feel in terms of what I do. I have also ran Camarilla points, which I also think are I'm going to say sort of ATR based. So the average to range as a broad calculation takes account of, I think, the close and some other price points, highs and lows from the day before, blends that, technical word from David, blends that with where we are today to give a sort of feel. And you can have that as a subchart, the ATR. And the idea, if I recall, was where you get the troughs, then you shouldn't really be trading. And then when you get some of the peaks, then that's good volatility, you should get involved, and so forth. I'll segue to you, Moby, because I know you often talk ATR as well.
Yeah, sure. I mean, I think we cross over on things like Camarillas and Globex VWAP. I mean, yeah, I don't like having millions of lines. I think I'm like David. I like a cleaner picture other than Bookmap, which is just a rainbow of shades. So I'm more a person that likes to know where those are, and with the VWAP, because the deviations do give you a map. So I'm not a person that will necessarily take a trade off G1 or G2 or G3, but you can see them expand and contract, and that gives you a little bit of an idea on volatility. And if I can drag my little range thing across, which is not behaving at the moment, there we go. I look at a range. I mean, the average range here, this is ES on the left and NQ on the right. Can you see those, David? Or
I can see them on the Zoom.
Off. I can.
And I can see them on YouTube, yeah.
Yeah, no, it's on YouTube.
Yeah, so again, ES is on the left, NQ is on the right, and the right-hand number is an average. And it's based on, are we going through a volatile few months or not? At the moment, we are going through a very, very volatile time. So it's, I haven't checked, but I think this is the last 10 trading days that I'm looking at for the average. And then, I've subdivided into little mini sessions: Asia, Europe, the total overnight, real-time hour, and Globex, which is from 1800 hours all the way through to 1700 hours. And it's just, if you know that, like Europe, which we love to trade the open, I mean, say the average range of Europe, which was 51, if we'd had the first hour chopping around and we'd only had 10 points, David and I would have a strong guesstimate that we're going to have a breakout in some direction, and it is not going to be fadeable. But that's just an idea. And the relative volume is, it starts, this is an idea, I mean, we're all friends, so I've taken Peter Davies' idea, and I'm counting sheep in terms of volume from the crack of dawn from 1800 hours. So that's the relative volume vis-a-vis the last probably 10 or 15 trading days. and that's right up to this second, which is 8:38. So it's every bit of volume that's happened since the start of the Asian session.
Okay, that means
hopefully that will answer the question.
Yeah, I hope so. So I haven't any feedback.
Back to you, Walter.
Yeah, just a question. The
numbers Walter, it may just be the David and Moby show for a little while.
That's okay. That's okay. Yeah.
Moby, just a question.
But just reiterating the point there, as you said, Moby, it's getting that feel of whether the spring is tight, whether the market has been in that, it's been range bound, and then it is due a breakout, and so forth. So.
Yeah. Yeah. Just a question, Moby. The table you showed, is this a dynamical table, or is it just filled once a day, or?
No. It's dynamic. I've used Sierra for a very long time, so I'm aware of all it can do. And one of the great things it can do is a text display. So you can take any number from any study and just display it as text. So that's from a whole bunch of studies looking at ranges, and it's live to the very second. Yeah. So even the average will change if you suddenly have a massive day.
Yeah.
But no, it's dynamic.
Okay, and just another maybe idea which might close up or be as additional to what you mentioned. I'm simply using for my daily trading to get in that kind of direction. You know, I have only NinjaTrader with me, and I'm using this lizard trader indicators here on my charts here. Yes, I love them because they are extremely simple and fine, so and precise. So what I see, when I'm talking about the daily range, is simply there's a nice indicator for the how is it called, the daily range projections daily. And that gives me as well a good idea for those of you who are looking at the daily ranges. What happened in the past days? That means 5 days before here in this chart. So we have a daily range, an average daily range of 103 points here. That's ES chart, ES. The September contract. And today we have a really big one with 138 points daily range. That means from the beginning to the low of the day before the market opens. We will see how that evolves. And as well, I'm watching as well the VWAP, because I have learned that the VWAP is a really important part there. The financial institution must obey the VWAP if they are selling or buying something. It doesn't matter, stocks or whatever. They must be compliant with their instructions. So they have to obey the VWAP in any case, and that's why the VWAP might be another tool in our trading to watch it. If the market is below, the most likely the market will be weak. If it crosses the VWAP, then it goes most likely up. So what we see at the moment, we are below, or the price, the market in ES, I'm talking about ES, is below the VWAP, below the 2-day VWAP, and as well I have a 3-day VWAP. You see this bunch of lines here around the pivot point about the 3-day VWAP, yesterday VWAP, and so on. We are below the value area low, yesterday's value area low. That means the market is really weak for today, and we will see in 45 minutes or so, when the market opens, what the market will do today after this. I call it a sobering party, after the sobering party, because yesterday they were so positive, and now today really a little bit more concerned about the recession. Not only in the US, but as well here in Europe. That's really something we will see in the next month. I hope they are wrong. But anyway, who knows? The market is always right in this case, and they are expecting to sell off here. And by the way, ladies and gentlemen, if you want to know more about the ranges, go back to our Discord room. I'm posting this institutional level, so everyone has a different view on the levels. And everyone is posting anything, something totally different. There are thousands and thousands, I think, of these levels. And what I'm doing here in our Discord room, trading room, we have, by the way, a great community there. It's absolutely fantastic to be there. There's a lot of respect for each of the members in the room. And what I'm doing, I'm simply posting the institutional levels. Institutional levels are kind of yeah, I'm receiving them. I'm not allowed to. I don't know how they work, but I'm allowed to share them for ES and Q, and that's quite interesting to watch them. So statistically, they're really good. I was skeptical at the beginning when I talked to this my friends who are working with a big financial institution. And I was skeptical about this kind of levels because everyone has its own levels, you know, and sometimes it hits the level, sometimes not. That's maybe by chance. Who knows? I'm not sure. But anyway, I found that these institutional levels are really, yeah, reliable, good, reliable. So just watch them if you are interested in ATR, in the swing. How to say, in the swing highs, in the swings of the daily range. That might be another well, let me say, another tool for you to utilize and to put on your chart. They are free, by the way. Check in our member, as moderator of our room, post them every day after I'm releasing the numbers, and that might be another, yes, as I mentioned, another additional, another tool for you to put on your chart and simply to watch how the market is trading between those levels or those brackets or whatever. So great, thank you, David. Thank you very much for the answer, and Moby as well. It's quite interesting. So ladies and gentlemen out there, if you have some questions to our experts here, of course, please post them here, or just ping me, send me an email, or yes, email me, or put it in on the Discord room. Then we will answer them, and it's simply fantastic to see there's an interest in the work we are doing here.
Yeah.
For you.
Yeah, there's a segue into that YouTube educational video you did yesterday on icebergs, because we have some lovely little icebergs and a nice profile building up on ES. I have not had a chance to watch your video. I'll probably watch it tomorrow, but this is something that we see in ETH a lot. We see a nice collection of sell ice, a little bit of liquidity just above,
Let me switch
a lovely profile and a push down. So I'm looking forward to watching your video to learn a little bit more about them.
Yeah, that's fantastic, because you know, Moby, the most interesting part when I had you know, a lot of people contact me, and there's really some experts on icebergs, and they said they are really the best in what they have seen so far. So I just don't want to talk about more about that, but really we are really happy to have that implemented that way, that we don't aggregate data, we simply plot them when they happen, where they happen, and that that's more reliable than simply aggregate. When you zoom in and zoom out, you have always different numbers, or you will see always different numbers on chart, and that might lead to a kind of how to say, insecurity or something like that, because you don't have an anchor to rely on, to stay on and say, okay, there's a 50 or 100 iceberg or whatever, and this iceberg was executed. And by the way, that's most interesting part. The icebergs can be executed actively and passively. That means actively as a market order, and passively as a resting order. There's no rule that an iceberg must be a resting order. That means on bid, on ask. An iceberg can also as well be the first order, where what our experts and developers found is that the iceberg can be first executed market and then switching to the resting side, or to the bid or ask side. That's quite interesting. Simply, ladies and gentlemen, take your time, go to the iceberg presentation I did on Tuesday, and listen to how we simply see icebergs and why icebergs are. And the most important part, I think, it's important to say icebergs are not a holy grail. So it's nothing mysterious behind icebergs. Everyone can do and code icebergs as well, if he is in Java or C++ or whatever. So that's not a problem, because everything is out there. And watch them. That's quite interesting to see.
No, I think what you just said, watch them, is key, Walter. I mean, like they should be a trigger. I mean, when you get this resting iceberg, I call it, because they've kept the order there. It's a trigger in my mind to look at the zone that they're trading in. So as you said, they can get in by passive and they can get in by active. I've looked at various order flow things that have been written over the years. There are a lot of people that say that they first get in passively and then they get in hard actively. But it's just interesting seeing what they do, because it's not going to be the same thing every day.
Yeah, it is absolutely. That's the point. So when we started, this iceberg discussion, I don't want to be a part of this discussion, because sometimes it becomes a little bit more emotional. Because it doesn't matter. It comes. I don't want to avoid any emotional discussion about icebergs. But when you switch, if you have the chance, ladies and gentlemen, traders out there, to have the TradeFinder, I would encourage you to have the TradeFinder, just because the icebergs are simply amazing. And when you we have different, you can put on different symbols on charts, so simple only, or you can have a professional view, and then you can learn amazingly lot about icebergs. That's really fantastic. Especially, and that's I mean, Moby, you brought me now to the iceberg discussion. But let me just finish this one.
We can stop it. We can move on. I'll pretend I never said it.
Just let me finish that, because everyone, we have a technique called dynamic iceberg development, and it's called DID. So the dynamic iceberg development, it's quite interesting to watch, because more than often, it doesn't matter if you have NQ or ES or whatever, most of the time you will learn, not more, all the time you will learn how the algos behave. That's that's absolutely amazing to see what happens behind the curtain in this market. What happens really on the bottom? What are these algos doing? And we can't say if they are going to if they are going to sell or no. Why? Excuse me. We can't say why they are doing that. We don't see the real. Yes, we can speculate about the reasons, but we see this algos running all the day, and that's simply amazing. That's fantastic. So Moby, I'm sorry. I'm simply excited about the icebergs. You hear that in my voice. And what I just wanted after David answered the question is, we talked, Moby and I, and we talked about this week about the imbalance track, and Moby had made a quite interesting observation. Would you like to talk about that, Moby, as well?
Yeah, sure. I mean, firstly, we can look at it in the traditional sense. The Walter traditional in this, it's a fairly dynamic new indicator, or it's not really an indicator, it's just a collection of data. Indicators are bad things in my eyes. Collections of data represented in a good fashion are much better, and I see Walter's imbalance line just to be a very good collection of the data on the imbalance. But this is the traditional way of looking at it here. So it's below zero. I've got the Walter light blue and yellow colors. Below zero, the imbalance is down. Above it's yellow, it's up. And we have an imbalance of 10, which is the lovely trigger crossover point that you mentioned, which would have occurred just around there. And if we zoom out again, and we take the basic philosophy that price will seek liquidity. So as the balance moves up, or the imbalance moves up, that's where it goes. And you can see that beautifully, and it goes very, very well with what the ES did. It had a massive move of 3700 up to 35. So that's 35 points, which back in the old days, that was probably 10 times as much as you'd get and make in a day. So yeah, that's beautiful. But one thing that Bookmap are trialing at the moment, maybe this is better looks at in the NQ, is they are introducing improvements to the heat map so that you can filter them by the size of the of the orders, known as market-by-order data in the right-hand side. This is an NQ chart which is filtered to some extent. And what I wanted to show with the imbalance line was where you filter it out, you can get much more dramatic spikes on the imbalance line, which I mean, maybe this was one of those cases where we'd seen the Middle East oil decision to pump in some oil into the market, and so we were bullish. So that could be seen as a climactic spike, and then anytime it goes back under zero because we're bullish, we go long and long and long, and then we have a lovely couple of spikes. The 1-2 punch at the end, the big spike, and then the little spike with the divergence. So it's just something that I'm looking at from every angle, and I'm looking to see what the market makers are doing on that filtered heat map as well. The imbalance line, I mean, I've only got 2 lines on my sub panel, the market volume stops and the imbalance line, because those are the 2 that give me the most visual value.
Yeah, Moby, would you mind to share your settings on the filtering?
Sure. I'll pull up the ES one as well. This is the ES, and I'll just show you the filtering. Let's have a look. I've just filtered 20 and above. The 400 is just a random number. It's as high as I could be bothered to put in. So it's just a filter of order sizes of 20 and above. And the NQ one, where I'm making a little bit more progress on, so I'll spend a bit more time looking at it this week. I am filtering on 5 and above. And what we also see on this one is, I might have to zoom out a little bit more. What we're looking at here is where the market makers are moving their orders after a swing point. So in a range band market, where we basically go backwards and forwards, that can be extremely useful for finding the next tag point that the market makers are trying to draw or attract price to. But the problem is you might get the opposite type of market, which is the one that happened in overnight, and you have to completely discount that because we go into trend mode.
Yeah.
And then we look at our overarching, where is the liquidity?
Yeah, absolutely. Fantastic. Just to mention here, traders out there, yes, Moby talked about studies configuration in Bookmap. So it is not this volume, excuse me, come on, it's not, yes, it's studies, yes. It's studies in the Bookmap, and you can set these levels in your Bookmap studies, so that just to filter out the big move, what do you say, big, come on, the big dots here?
Oh, you're talking about these big dots here?
Yeah.
Up here, or, yep. You mean those big dots?
No. The line before. I'm just looking at studies configuration. Do you have the 7.2 as well, or are you running Bookmap 7.3?
7.3.
7.3. Okay. Good. So that's another idea how you can simply filter and be alerted if something, and that goes hand in hand. Ladies and gentlemen. With that what we talked about yesterday. Just have a look here on my chart here. That was a very lovely trade. It was not only lovely, it was perfect. I would say it was a perfect trade. That was yesterday. I'm sure that was yesterday, and it goes that what Moby mentioned right now, just to filter out and to find the extremes, or try to find the extremes.
Oh, you're talking about filtering the heat maps. So you're saying that kind of filtering.
Yeah, that was my idea.
Yep, that's fine. Yeah, I mean, that is one which has always been in Bookmap since they introduced this colored heat map. But I think another one may well be this filtering by order size as well. It's just it's easier to track them when you completely exclude all the little retail traders as well. So I think both of them are great. But unfortunately, we've only got one set of eyes, unlike David, who's got 5 sets of eyes. So
I'm a spider. I'm a spider. But that was a great trade you had there, Walter. I know quite a few of us caught that, and for me, I think I did quite a good. Well, let's call it a write-up, more than my usual blurb of rambling in the Discord room about that trade. It was early on into the session, the New York morning, if I remember rightly there, Walter, looking at the times. Yeah. And echoing what we'd said earlier on, there was a fair bit of constant hidden asks hitting the heat map. And they'd disappear, they'd hit, and they were in that sort of 1 to 200 range, which for RTH is not very big, says me as a mini trader. But still, they were hitting in, and that level that we got up to was an option level. It was a spot gamma level, or as I always call them, unicorns. And I think I'm going to say it was L3 or L4, and that was well telegraphed. Also, I run those cumulative deltas, and I filter that cumulative delta. So I'm picking out the larger lot traders on the lower subchart. So it's those. In the theme of filtering, those traders that are placing more than 20 lots at a time. So it takes most of us retail ladies out of the picture. And those guys were clearly selling up to that level. You had the ice chipping away, and as you've got on the chart on the screen there, there's then a blizzard of sell activity, and down we went. I must put my hand up whether it was 20, 30 handle move lower, but it was lovely. That was the high of the day, high of the past couple of days, and here we are now, not far shy of 100 points lower.
Yeah, absolutely. Yeah, the point why I'm mentioning that just to show what I just want to add what Moby said. You can filter. Bookmap allows you to filter. The smaller trades out of on the chart, so to see only the big ones. Yeah. And the point is really, if you want to see that, you can do that, and then add a TradeFinder, and it will. I love this word. Yes, it will become more dramatic. Yeah. The presentation will become more dramatic. So that means you will get a little bit more, clearer picture of the market if you do that filtering. So because I'm always saying that having thousands, it's a little bit too much, it's exaggerated, but having thousands of lines on your chart and having thousands of symbols of your chart and that's my concrete critics on having everything on chart and numbers on chart on whatever. It discloses the real picture when you have a chart or when you are trading. So less is better, less is more. That means keep it simple as possible. Less is more on chart. And why I'm showing that, David and Moby, is simply because again I've gotten it is as it is, but I've got an email who says that's too complicated. I can't wait. I can't do anything. And with this kind of trading, the Bookmap is to not flurry but colorful, that there are too much information on it. So yes, there can be too much information on the chart, especially on Bookmap. You can add thousands of thousands not, but several indicators, and that makes simply the picture a little bit more blurry. But anyway, what I wanted to show you here with this picture, and the trade yesterday, by the way, is simply the most important time in trade. The most important part in trading is waiting. The point now, that's not a freeze here. That's simply a screenshot of yesterday's trade, where I wanted to point out, and that what Moby mentioned is, this is a trade of yesterday, and it came in time. It was, the market went up very hard, and suddenly you got a volume stop, suddenly you get a dynamic iceberg development, suddenly you get an iceberg at that place, or around this price, and that is really a good opportunity. If you are patient and you can wait, simply take the opportunity. The stop is absolutely minimal. That means by stop not more than 2 points. You see the liquidity over there. Yes, here at that point, where the liquidity is. So you don't need to have a 5-point stop here. Maybe 1-2 points is totally sufficient, totally good, totally enough for this trade. And your risk and the outcome, I think it was 15 points at least, or 20 points at least. I can't remember anymore, but at least it was 15 points in a row you got out of this trade. If you can wait and allow TradeFinder to guide you through the trading day, if you wish to do so. So I'm switching back to the live trading, to the live chart here, just to see where we are. And that's quite amazing, ladies and gentlemen, because waiting is the most important time in trading, and it is the most hardest part in trading. And there are a lot of great techniques just to avoid not only over trading, but avoid too much information on the chart, just to keep you on the right side of the market. That's what I wanted to add. Yeah, that's what I wanted to add. Moby and David, can you, Moby, you mentioned the imbalance tracker as well. So your recommendation is simply to reduce the dot size. That's what you mentioned before.
On the imbalance line, it was really, it's a couple of betas. I know Bookmap won't mind me mentioning them, that they are releasing as public releases in the next couple of weeks. One is this heat map Pro, which is a filter where effectively you can filter by order size. So in ES, there's nothing here in the order book with any order less than 20. That's an individual person's order or individual algo's order. So there's that one, and there's the advanced DOM, which I think may well be released now. I don't know, David, if it's already been released, but I think people love that one because it looks just like something that Peter Davis might have built.
Yeah,
excellent.
Again, I'm sure there's no copyright infringement or anything. And a DOM is just a DOM, but it does have every single thing in that you might expect if you were using that software.
I must admit, Bobby, I copied that from Peter, and I think it's really. I mean, I think we have had this discussion last week. I remember one guy asking, or was it an indication reel? I don't know anymore. One guy asked last week, I think it was, how many people are you utilizing or using the DOM this way, and how many people, how many out of 100 people are using. So I think that was it went in this direction. And my best estimate, I'm optimistic. My estimate, I would say 5. I'm not sure if this is right or the number is okay, but my impression is when I'm looking at not only hearing this in our room on the TTW Trader Discord room, but in several other rooms, there is simply no DOM on the chart, and I think that's let me say friendly, that might be a mistake, because you can get a lot of information out of the DOM. And by the way, I should say, and all the credit to Peter Davis, because he came out with a Jigsaw Trader 10-15 years ago here, and that was really something amazing for me as a trader, starting over in 2011 with a Ninja Trader 7 and the Jigsaw Trader then. And that was really a good help. The difference, why I'm stick with Bookmap, is simply because it's easier to read. So when you have this DOM and everything flickers and goes up and very fast, it depends on if you have a liquid or not less liquid market. That depends. You can't, at least I can't follow the numbers for 10 minutes, for example. It's extremely hard, so it's really hard for me to.
Well, I've seen those YouTube videos of an NQ DOM in RTH, and that's quite special. Yeah, I mean, you must have eyes that can. You go. It's just ridiculous.
Yeah, no, agreed. Yeah, I do use the DOM if I chip in to trade ES from a fair bit of the time. I do also chart trader. I don't think I've ever traded the DOM on Bookmap, so it's on Ninja, and you'll see that occasionally on the right-hand side of my various charts. Back to that filtering thing, as I probably said earlier on, my time and sales, my TNS is also filtered. So that's reconstructing the tape. And then there's different colors. So the really high trades of, I'll just pick a number, say over 100. So a contract of over 100 gets fluorescent and it's a larger font. It's not that I'm trading from it at all, but again, it's part of that confluence thought. So looking at where things are. So like now, let's look at ES. It's coming down into a little bit of liquidity. I just glance over at my time and sales and I can see there's some buying going on. There's also some selling. So it's not to me screaming. We can go back down to the two levels we kissed on earlier on. So when we bounced off that 3696 and just below that you've got a put wall L4, you've got an L3, you have a VWAP. Certainly on my charts you had the first deviation VWAP, and as you would say as a previous institutional trader, Walter, you remind us of that 370000 level.
That's a magical number, yeah, of course.
Yeah. So that's where I'm using my DOM, and as I say, I do trade from it, but I have had some issues on, again, I've shared those posts when I do trade from it at times where the ATM on Ninja, so that's where it's putting in, if you've set it up, that is, if it's putting in a stop and a TP just to protect your account. And before we started, Moby and I were talking about dragging our stop losses around. There are times when in the firefight, in the trenches, a bit like yesterday with FMOC, that bluntly Ninja can't keep up. That's no slight on Ninja. There's so much data going through it, and and I've got my stop tolerance set really tightly, so I don't want slippage. So if it slips, it doesn't fill. But then, not the right word I think for this. I'm naked. I've got a position and I've got no stopping, so I do then get a bit of a flap around. But that's David. Yeah.
I also think with Bookmap releasing the similar DOM as the one you use in Ninja and the one that Jigsaw have, it will encourage us to use that data feed for trading. I mean, I think we've all tried trading just clicking on the heat map, and it is not my favorite cup of tea.
Agreed. It's not.
Especially when you trade thinner markets like NQ, because half the time you have absolutely no idea where you got in. Somewhere on the screen it says, but
Yeah, that's one of the reasons why I'm not a friend of NQ trading. So I'm I've traded when I was with John Grady. That's I think his page is No Bullshit Trading. But anyway, when I was with him, I've learned, I attended his seminars. Then the treasury was extremely well, but it was a little bit too slow at that time. So for myself, and I found the ES is for my personality, the ES is the best one, and therefore NQ is a little bit too wide. Maybe I'm too old for that, and who knows? I don't know. What I wanted to show you, and that's quite interesting, ladies and gentlemen. If you are interested in a DOM out here and a Bookmap, I'm totally a fan of a DOM, but if you want, David mentioned that the price is coming here into the liquidity, and we see very clearly what liquidity is. It acts as a support. It's on the bid here. The price comes down into liquidity. Take a little bit off this liquidity. The imbalance line, that means order book imbalance line, is still below zero. It's still below zero. That means it's looking for the bid side. But what you can do, if you follow my tip or my advice here in Bookmap, just look here where my cursor is, and then double click into the column. Double click twice, I'm not sure. Yeah. Then this aggressive volume or market volume becomes clear, or is cleared by all numbers and all graphs. So if you're just interested to see what is right now happening here around 37.14, then it's a good idea simply to switch off all this unnecessary information, let me see, that way in the aggressive volume, and you can really get a spot on view which guides you, everyone here, to see where are the sellers, where are the buyers. You see they are hitting the bid harder than lifting the offer in this case. That's quite nice trick, ladies and gentlemen, just for you, from Moby, David and me, for free. enjoy it. If you want to have this dome on your chart, please go to TTW-TradeFinder.com. We have prepared BMCS or configuration files for most of the instruments. Simply apply the settings to your chart and you will get the same settings in 1 second. Let me say 1 second.
I'm just looking at some of the chat there on YouTube, Walter, in terms of time zones. So any charts that David posts are, I'm in the UK, so I'm currently on GMT plus 1 hour, British Summer Time. You're on Central European Time, aren't you, Walter, your charts?
Yes, I am.
And Moby is on Australian time, Western Australia time, Moby?
Yeah, but my charts are in New York time.
That's possibly the confusion to some, not for me, but to some people. Yeah, got you. Good. And there's a comment there about volume that mine's quite loud, but Walter and Moby
I see that.
A little quieter.
I have just switched over here to my Sennheiser microphone. I'm sorry for that, ladies and gentlemen. I didn't recognize that I have switched to the wrong microphone. So please put up your levels. So now I'm here. Yeah, that's really.
Yeah. So I know we're talking time and sales again. So I'm just glancing over, and I've got a fair bit of green coming through. Either some 60 lot has just gone through, so it's not screaming at the moment. We're going to go through that little bit of blood and go back down to the 3700 area. Of course, everything's possible, but it's not saying get short yet. Does it mean get long?
No. At the moment, I would say in this case, when you watch the chart, that's really fantastic to see that there's a support as well. But on the other side, we have still the imbalance to the downside. So I mean, we will see in 15 minutes or so when the market opens what the market will do. I'm doing when I'm around, then I'm doing the preparation for the mainly for the ES in our Discord room, and what we should keep in mind today is that the gap we are opening gap down, and what might happen? It's unbelievable right now, but I've seen that so often that the market opens, that's the European session here, and the market will open, and that it can happen that some kind of short covering will start. Keep in mind the gap today is 37.93, I think it is 37.93, and we are opening gap down, and don't be surprised. Don't expect that there's no rule. We should expect more downside. No. Of course, it can happen. We don't know. We will see that in a few minutes.
And I would re-stress again those levels of the 3696, the option levels that Spot Gamma pull out, the put call, put wall. If it does scoot down, it's been defended there so far. Doesn't mean typically, in my mind, 2 or 3 runs at those levels, then they're shot. But that could be a line in the sand to rally strong from. Question there in the chat in terms of data. I'm running dxFeed into Bookmap for my stocks. The Rithmic data for ES and NQ and anything else like that I'm running. Ninja is fed by CQG data, and I at times, not this month, at times I also run kinetic data into Ninja, but kinetic and CQG are the same company. But
that's the same with me here. Go ahead.
No, I mean, I've just switched on that beta study, Walter, because you're talking about the large trades hitting at this liquidity. If you want to show my screen at all. So this is a beta study. I've given them a lot of feedback, and I'm expecting quite a few. I'm hoping for quite a few changes. I think my favorite change will be on filtering and also vertical displacement. Have you got my screen up?
They're moving that liquidity on ES. They're pulling it a little bit, so it might be a short.
So you can see the horizontal tape, which is the time and sales that David just mentioned. It's the DOM column that Walter just mentioned. So I've got it so that larger trades come as bigger rectangles or squares. So it's more interesting on ES certainly than NQ, which is just a stream of ones and twos. But I mean, if we saw some great big 65, 100 pinks, that would be what Walter was hoping to see here.
Yeah, I see that. You know what's quite interesting, Moby, on your screen? I think it is the right one is NQ. Yeah, it is.
Yep.
And watch the iceberg development here. Maybe you can zoom out a little bit to see it completely.
Which one, NQ or ES?
NQ, yeah. There's the, ladies and gentlemen, have a look at Moby's NQ screen, which is quite interesting. Can you point out to this DID? It is up to 111,370. Yeah, the first one. That's quite interesting to watch. I'm not sure if this is going to happen, but anyway, and dynamic iceberg development starts when the first part of the iceberg was executed, and they are adding constantly to a certain price, or they are waiting to be hit at a certain price. And on his screen here, on Moby's screen in NQ, you see what is the price? Let me know the price here. 11.
It's 338, 11,338, 11,340.
Yeah, and they jumped up, and they're maybe awaiting the price at 11,338 or so, something like that. That might be quite interesting, because this algo started at 11. What is this? 171. 170.
Yeah, and it helps obviously if you get other little triggers from TTW there. We've got some nice buy ice that's just appeared on NQ, and we've got a sweep down of 30, which is a decent size sweep.
Yeah,
and it's an MBO sweep as well, so it's not just an ordinary sweep. So yeah, I mean, I love those indications, like you said with the DID, Walter. But experience has taught me that confluence is great. The more triggers we see, the better.
Yeah, of course. But quite interesting to watch if you watch my Iceberg educational videos. So I will talking about these DIDs as well, and that might be quite interesting to see if the market really is strong enough at the open to short cover. If you are following volume profile, how the shape of the volume profile will be. It's like a P like Peter, and we will see if this will happen after the open. So everything is still possible until when the market opens, and don't be surprised if this market simply heads up into the 50, 70 and the gap area as well, because everyone is expecting a down on down day today. It can happen. My preparation, my information I have here, if they break 3670-ish, 3680, that's some kind of how to say, important area, then that they will flush down. But at the moment, today, the average daily range is 138 points. I think the highest I've seen here was 180 or 184 or something. I remember that was the highest drawdown somewhere weeks before. And at the moment we have 138 points down, and we will see what happens after the open. Sorry, Moby, I interrupted you.
No. I just thought we'd, how you said they accumulate passively and then actively. I think on NQ we've seen a bunch of these buy icebergs, which are all passive 5, 7, 10s, and then we saw an active 74 where they took some liquidity out. So it's interesting if this is a zone where they are gathering some fuel for a run up at 9:30. So it's just one of those things where you note down on your little sticky note, this may be one thing they're doing.
Yeah, great. So Moby and Dave, the time is extremely an enemy. It's an enemy for myself. When I look at the time, it's so that the 1 hour is so short, and my impression, so my feeling here I have about this our TTW and Friends. It's great to to talk as everyone every week with you. We have a few minutes left before the open. I would like to, to do or conduct a live trading based on ES for the next 1.5 hours, and talk about what I've did in the educational sessions, videos, and wrap up everything. So stay with me the next 1.5 hours, and I'm really sad to leave this TTW and Friends chat, because it's always great to be with Moby and Dave, and to have a very vivid talk. That's fantastic.
Definitely.
Absolutely. Just to mention Moby and David, I need to plug off. So that means I need a little bit more break. I won't be around next week here. And then when I'm in my Mediterranean residence, we will continue maybe in 2 weeks.
Nice.
If nothing happens. Maybe
in
2 weeks, and then we will start over. If nothing happens, if I have power there, and if internet works, everything will be as always here. So thank you very much, Moby, and thank you, David.
Thank you both
for being with me today, and for this extremely lovely conversation, and the help and ideas you are bringing into this community here. And by the way, ladies and gentlemen, traders, Moby and maybe us as well, David, it depends on, will conduct a live trading on TTW Trader Discord room. So join them. It's really exciting to watch Moby and David trading in the pre-session. That means your time. What time do you have in mind, Moby?
I was thinking it depends on if David's around as well. Maybe an hour and a half at the London Open, or maybe we'll do it as a New York breakfast session as well.
We can move it around.
Yeah,
can't we?
Because I do like the way David can see things at 8:30 in the morning. It's just like. Yeah, you have your
So it's fresh eyes. That's why. That's the thing. It's your
Great, definitely. Fantastic. Thank you, Moby. Thank you, David.
Thank you, Walter. Thank you,
Moby. We stay in contact, of course. Yes. Have a good day. Bye bye.
Cheers, everyone. Take care. Bye bye. Bye bye. Bye bye.
So, ladies and gentlemen, stay with me for the next 1.5 hours. Give me some minutes just to switch on my brokerage account, my brokerage TWS TradeFinder workstation. For some reasons I haven't opened it for now, and then I will comment what happens here in the market, and as well stay here with me, join me, and if you have some questions, leave them in the room, or not here in the room, in the Yahoo YouTube chat as well. You can leave them at or in our Discord room as well. Ping me, send me a private email message, and I will answer, or I will keep it back until we are back with our friends together here to answer your questions. Okay, ladies and gentlemen, welcome to our live trading. Our market will open in in 1 minute. 1 minute left before they open, and you know we have had yesterday the FOMC announcement. The Fed raises the rates for 75 basis points, and everyone is talking about today about a recession. If you read the newspapers, if you read the news, there's more pessimistic outlook of the economy in the US and the economy as well in the Europe. And that's simply something maybe where the markets are a little bit more scared, and so they are starting to sell off. There's no enough bidders on the bid to support the price right now. You see my candle chart here, and we already have the market already has traded 138 points from the open. The pre-high was 38.33, and now it's trading into 36.95, a little bit recovering here from maybe the low 36.95. As I mentioned, my comments on in our Discord room and the presentation of, not the presentation, but the posting of institution levels are showing that the close here is at 37.93, and we will see if the market is really strong enough to do a kind of short covering. If they are breaking 36.80, 70, then we will see most likely lower prices, and that's what we just expect. So what I'm conducting, what I'm telling, what our team, Trading to Win team, is telling: relax. Trading must not be a stress for you. Trading is something where you should understand the markets. Yes, at least you must understand the markets, I would say it that way. And then let the market come to you. Let the market telling you what you should do. And when we started to develop a software to analyze the markets, for us, TradeFinder was born. But the TradeFinder is a market analysis tool, and it will analyze a lot of signals in the market where you might not expect and you don't see. For example, native icebergs, synthetic icebergs, volume spikes, which are kind of liquidation, sweeps, which are only visible with market-by-order data, and so on and so on. So the market is open. The market is open since 30 seconds. And then let's see what happens. So bounce off, and you see this very clean cut here at 37.02. Just see, it's very clear cut. So they don't expect the price coming back. You know, the order book imbalance says, or the theory of the order book imbalance is that informed traders are placing their liquidity or their expectations in the book. And right now, when we take an overview of the markets, then you see the expectation is that the price is coming or trading back or trading into 36.80. We have even 36.55 here. We have 36.55. Let me just put the heat map a little bit higher. So the expectation of the market right now is 3700, 3680, 36.55 and 36.50. The point is, these are informed traders who are placing their liquidity in the book. So that means the liquidity on the bid is higher than on the ask, and therefore TradeFinder's imbalance is showing, or is simply trading below, or indicating the graph is below the zero line here. On the other side, we have as well a liquidity at 37.50, which is dynamically displayed. So you see it's not as red as here because simply there are lower, contracts sitting at 37.70.50 than on 36.80 and 3700. So the expectation at the moment, we have a down day when the market is trading lower. Because no one of us is can predict the future, and even not this informed traders here, even those are not able to know and predict the price. They expect the price at 36.80, but if something happens, we got news, or we get other information, or the market gets other information, he will digest this information very, very quickly, maybe in a few seconds, and the price might go, or the aggressor might be in a better mood, in positive mood, and they are simply buying everything from ask, and it means they are lifting the offer. And then you will see this informed traders here at 36.80 or wherever, 36.90 or 55, they will cut off their liquidity. They will cancel their liquidity here because the price is not coming down. So these are expectations in the book, but no one will guarantee us where the price will trade. Will the price trade for sure into 36.80? Maybe, but no one knows. So the probability is high because these informed traders are really good, better informed than we are. They have more information and they know how to trade. So for the first of all, if you're not sure what the market is doing and will do, if you're not sure what to trade, so lean back, sit and wait. You will at least get 1-2 great opportunities along a trading day, and that's totally enough. That's totally sufficient. I would say don't chase every tick, don't chase every point you need. The intention of TradeFinder is simply to guide you through the day. If there is nothing on chart, then that's not a mistake, that's not a fault, or that's not an error. It's simply nothing you will, yes, the TradeFinder is analyzing because of the settings. So let me go very quickly through, very briefly, to the settings of TradeFinder for AS. I'm watching an volume stop signal which is 1200 and higher. I am not interested in every single small signal. I'm interested in sweeps which represents 300 and more contracts. I'm interested in volume spike signals which are more than triggered, which shows more than 3000 traded contracts within 30 seconds and going through a range of 8 ticks. This is a kind of liquidation here. So they are liquidating a lot of volume, and that will be indicated by the volume spike signal. And if an absorption, I'm interested to see only 1000 contracts when they are absorbed. I'm not interested in to see 10 contracts to be absorbed, 50 or 100. No, I want to see the big fives, the big trades to better understand what's going on. On hidden orders, icebergs, I did an educational video on Tuesday, so please go to the YouTube channel or our TTW-TradeFinder.com/video channel page, excuse me, not channel but page, and go to the iceberg presentation, because we have the best iceberg tracker in the industry here. So don't, yes, give it a chance, watch it. I'm interested in to see icebergs which are bigger than 200. I'm not interested in an iceberg of 10, 50 or 100, just to see what the market is doing with this, when this big icebergs, and 200 is not big, but anyway, I want to see them. And then the iceberg development shows me that if an iceberg 30% of 200 is bigger than 60 and it starts to develop, I will have it on chart. And the iceberg plot here shows me every single printed iceberg, native iceberg. I'm talking about native iceberg because I'm watching only the native icebergs here with the MBO data. We need MBO data to see to analyze native icebergs. And that's the settings I'm following. And you see here, that's a sweep of 300. That's a sweep here. A sell sweep. Again, a sell sweep. So the pressure to the downside is really big. I just want to switch to symbol only. And now what's quite interesting, an exhaustion of this down move happens. The high liquidity 3,680, yes, it might be in magnet, but you see what happens right now. What happens is simply it came to exhaustion. They are waiting 3680. They are simply awaiting. You must understand, you really must understand that the liquidity in the book or placed in the book is an expectation. Is an expectation. If something happens now, we get we get news in the market. It will maybe rush up, and you will see that this expectation is not met or will not be met. It depends on what happens in the market and how the aggressors here, how the aggressors digest this information. Elementary trader. The dxFeed is not MBO. The dxFeed is not MBO. You won't see elementary trader. You won't see sweeps, and you won't see native icebergs. What you will see synthetic icebergs and all other indications like volume stops, volume spikes, absorptions, liquidities, and so on. Okay, if you have only the dxFeed, the exception is that you won't or can't see native icebergs and sweeps, because for native icebergs we need market by order data. Please go through my iceberg video from Tuesday. It's on ttwtrader.com/videos or here on our YouTube channel. You will need that. And if you need to switch to Rithmic, you don't have a broker who provides Rithmic, please use the test, the test Rithmic market data, which is offered on the Bookmap marketplace. So you can start with Rithmic with test data if your broker does not provide Rithmic data or offer Rithmic data for you. At Opulent Trader, please, or Opulent Visions, please email me, send me an email just to clarify what you need, what you exactly need. So I can't answer that right now because we are in live trading, ladies and gentlemen, and I would like to just to guide you through this live trading based on that, what I've talked about the imbalance tracker, about the liquidity. You see the liquidity right now is 3,000. The market is really, yes, 3,000 market volume means there are an average in the last 30 seconds. The market is strong. That means there's a high market participation, active market participation. We are talking about aggressors here. And the average liquidity on each side, on bid and ask, is only 70, 75. That's better than 40. You will see, and you will feel the difference. You will feel the difference when the liquidity drops to 40, 50. You will see that on your price ladder if you're trading to, if you are trying to trade this market. You will see that on your price ladder because it is simply too fast. It's simply too fast. What we see here right now is, I'm sorry for that. That was really maybe a good opportunity as well to go long here, because there's the idea, so-called dynamic iceberg development. You see, the first part of the iceberg was hit here at that time. That was 44 and 20 seconds, so what I have here on my chart. Then the second one as well hit at that point, at that time, and now he is still awaiting at 36.84. The algo is awaiting that the algo is awaiting another fill at 36.84. Exhaustion is here at that level. Now look here what happens. Look here what happens. That's simply amazing to watch. This algo cancelled. This algo cancelled his order here. This is a sign that this algo cancelled the order. That means there's no more expectation or waiting for lower price. You remember 36.84 was the expectation of this algo. He wanted to be hit here at 36.84, and then waited, and then suddenly cancelled for some reasons. We don't know the reasons behind all the icebergs, what they are doing, but most probably, you see, that's what I wanted to say, most probably the market is trading up or will trade higher. And please mind following, these institutional levels are in mostly 1 hour before the market opens. 1 hour before the market opens. That's nothing hindsight, that's nothing I'm putting in right now when the market is open and when I see liquidity here or bounce off here. All these levels are for free in our Discord room. We have a very great moderators like Chuck, who is adding them into a cloud notes. You can use it for free, by the way. So that's really amazing. You see, this institution levels was long before this 36.80 came up with liquidity here. So let's focus on trading. So totally impressive as well. Go through my Iceberg presentation of Tuesday here on YouTube channel, as well on our webpage, and try to understand, or no, you will not try, you will understand how we watch the icebergs here. You see 224 has been traded here, have been traded here, 224, and then the iceberg, or the expectation of the algo, was to be hit again, but for some reason they cancelled. And cancellation of liquidity, cancellations of Iceberg are mostly a sign that the market will not trade immediately back into 36.84, or the market, they don't expect the market to come down or to come to their expected price. That's important to keep in mind. So the market volume is a little bit lower than we saw at the beginning. It started with 5,000, dropped down to 3,000 now. Actually traded around 2,000. Liquidity dropped as well a little bit from 75 to 60. And 36.8 is still prominent and important level. So another DID came up, was traded. You see the traded DID is not plotted on chart because it's below 200. That means it's only plotted here in the dynamic hidden order plot here. Because it was a smaller one, I'm not interested to see that on chart. It's not of no help for myself for making money here with smaller icebergs. No, we don't know. He sold, he got what he wanted here at that point, at that time, 224, Juliano. 224 contracts have been traded here. He got what he wanted, whatever it was. As well, there was a sweep of 500. There was another sweep of 300. And the question is now, what was the intention? Maybe to push the price up because he wanted to sell higher. That's another possibility. You know, when you think that's simply the price is too low and you want to make some bucks, you need a price higher in order you want to short and to cover here at 36.80. And that's what I meant, ladies and gentlemen who are listening or watching this channel here. Wait until the market comes to you and don't chase the market. Relax, sit back and simply watch. There's no need to chase every tick. There's no need to chase every point. There's no need to do anything. I'm watching the volatility indices, I'm watching the SPY, I'm watching the volatilities, the ADD. Let me have a look. I'm a little bit here more
tick new high.
It's a little bit more stressing. So the ADD is extremely down. The reading is minus 597. That means the market is totally bearish. Totally bearish. The average, it's really deep in red as well. The ticks are deep in red. They're below zero since the beginning. The cash market is down. VIX is currently a little bit more better off from 32 to 31.20, so it's a little bit more optimistic. But anyway, on the VIX we see as well there's a pressure in the market, a down pressure. The market is bearish, and as well TradeFinder guides you really perfectly with the imbalance tracker. It's still below the zero line. That means the imbalance is on the bid. This is the hidden order. This is our Iceberg tracker here at Jim Rainman. This is our Iceberg tracker here. Hidden orders. It's the best in the industry. I promise you, it's the best in the industry, in the trading industry. This is we call Iceberg's hidden orders. Please watch my education video from Tuesday. And we can detect native and synthetic icebergs, and we can do if we can combine both, and we have a dome, we have a dynamic Iceberg development as well, we have dynamic hidden order plot. So the dome is here on this side, on the right side of the chart, of the heat map here. You see where my cursor is. So maybe you see it now better. That's the dynamic hidden order dome or profile. That's the profile you see visually. All hidden orders, all icebergs executed. And that's a hidden order plot where all native icebergs are plotted in their intensity, which are below 200, because my settings, I'm not interested to see 10, 50 or whatever. I'm simply not interested in those icebergs. I want to make money here, and I'm not interested in every single smaller dot on the chart. That's my intention. That's, I think most of us have the same intention, not to read everything on chart, but I'm setting my settings 200. I even have 300 here. I just want to see the low, the bigger, how to say, the greater, the bigger icebergs. We have had a very extremely well volume stop, which means sell, sell, sell. And now the market is approaching, and there's one expectation of this institutional traders here, of the informed traders. The market is, they expect the price to come into 36.80 here. Alexander Pirot is asking, can you explain the blue line? The blue line, this is the order book imbalance. This is the order book imbalance. The order book imbalance, TTW-TradeFinder. TTW-TradeFinder is a market analyzing tool. And that means TTW-TradeFinder analyzes icebergs, native icebergs, synthetic icebergs. It plots dynamic iceberg development, it plots algos, it finds algos, it plots market volume stops, sweeps, volume spikes, which is a kind of liquidation, absorption, imbalances as well, and the liquidity. It plots the liquidity here. You see here the liquidity and the liquidity price dynamics plot here. That's based on Bookmap here, and we are fans to understand the TTW tree and trading to win him are fans of understanding what the market volume for each instrument is. You have, look here, we have market volume of 2000 and the average liquidity in the book is 70. And when you go back to NQ, just for comparison reasons here, just to give you a clue how worthful and helpful TradeFinder is, you see here the market volume for VQ is, just give me a second until my chart is loading or is loaded. Market volume at the moment in Q is 700 and the average liquidity is only 5, 6, 7. And that explains why while you have some wild price ladder when you place your orders here for NQ. And let's have a look. Maybe if you are interested in cryptos as well, I have here a really exotical one, Tron. You see it works for cryptos as well. So you see this exhaustion points here, or liquidation points.
NQU2 by volume spike.
And here as well market volume stops for Tron. That's simply amazing. This product is simply amazing. If you are interested to learn more, to dive a little bit more into trading, then I recommend using TradeFinder. So the explanation is for you, Alexander. This is the order book imbalance. I kindly ask you go back into our videos. I'm posting when I'm around, not on holiday or whatever, video about the market and how we implemented the market mechanic and behavior into TradeFinder. So as long this blue line is below zero, the imbalance is on the bid. The balance is on the bid.
NQU2 by volume spike.
Let me switch off this sound here. You can set, of course, a lot of sound and triggers and Telegram notifications as well for every single instrument. So that buy volume spike, as well a kind of liquidation here. Yes, Alexander, that's a very simple explanation for that. If the imbalance line is negative, that means it's below zero, then the imbalance is on bid. And if the imbalance is on bid, then that's simply an expectation. That's an expectation of informed traders and institutions that the price is most likely to trade against them. Yes. So yes, of course, BTC. Let's have a look at BTC here. Not sure if it works or not. Oh yeah, it's not happening much. You see, it's harder to adjust the TradeFinder for this kind of trading at BTC. I'm using the Bookmap data, the multi-book of Bookmap here. It's really not really easy to adjust everything, but the liquidity is still, yeah, it's on the downside. I'm not sure if this is really good for BTC. I'm not a crypto trader, so I'm just trying to understand it better. Yeah, it's still Ethereum, ETH, down, down, down. See it quite nicely here as well. Now coming to an huge synthetic iceberg here, and it's simply supporting the ETH right now. Tron was a really exotic one. I just wanted to understand and to see, and you see how this stuff is trading. That's simply amazing. I'm not trading that, just observing and seeing how the TradeFinder works with these exotic instruments like TRX on Binance. Liquidation, 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 very clean. So the questions were which of them you want to use. It's still a sell here. You got here a nice sell signal from Market Volume Pro, which is a separate product available on Bookmap Marketplace. You can add it as a separate tool, separate and additional tool to your chart here as well. But let's come back to ES again and see what we can do in ES. I missed a nice trade that was a short here. As I mentioned, when this algo was cancelled, the probability was high that the market will not trade against this algo. That means if they are not trading against this algo, the market or this algo, whoever is behind, expected a higher price. Yeah, Alan, it can be. So I'm not a crypto expert, and I would like to get any help I can get on setting up the BTC and ETH or whatever according the best settings active crypto traders are recommending. But still, Ella, I'm impressed about the accuracy of TradeFinder with Tron, for example. As well, yesterday and the days before, I have a really brief look at ATH and BTC, and it was really interesting. It was good. Yes, the DID is always an algo, Viviana. The dynamic Iceberg, there's nothing, it's the size. When a DID is, or Iceberg is placed, it's simply the size. Maybe the DID can be you. It can be, or any one of us here. But the point is that since as long as you can't trade 200, 300 contracts in ES, for example, then most probably we can assume that the DIDs and the icebergs are simply algos. You can do that by yourself, by the way, using TT technology software. Then you can split your orders into several tranches, into several parts, and then execute them as icebergs as well. And that
BTC USD Delta Cell.
I have to switch off here. I think I did it. Just to get rid of all the signals. All icebergs, the most icebergs, I would say, the bigger one, 200, 300 and more, algos are financial institutions. It's a kind, I think, we see that's kind of hedging. So, the ES E-mini, NQ E-mini and E-mini contracts were invented in 1997, 98. So just to give a more playground for retail traders, because they are becoming very cheaper than the cash markets. And the hedging, the options trader are using the SPY, the options traders are using QQQ, for example. They are hedging in the cash markets where the sheer amount of capital is around. It's not here the ES and Q. It's simply the under ES and Q, of course, as well, are underlyings of this big, huge markets. The SPY, ETF, QQQ, the cash markets as well, SPX. And therefore, this algos or this icebergs or DIDs might be, or not might be, but are part of this huge, big, maybe hedging opportunities or possibilities or whatever. We will never know the reasons. We can assume, but the assumption is based on experience, on screening experience. Alarm. Yes, thank you. You're welcome. Jana is asking how why the PDP shows more green than red. Is this an indicator for accumulation? The PDP. Yeah, in this case, it might be in this case because the PDP is showing at the moment more buyings than sellings, but I'm a little bit cautious with this liquidity here. So not sure what this market is about. So they are trying to support, and this support is green. So they're trying to support, the support is greenish. Yes, that is more support, but I don't know whether we can say it's a buy or it's a sell at the moment. Let's see if we get more information on that. We have a very nice divergence here at 36.77, 78. You see they are trading around the institutional level right now. That's really weird. So I try to get in here. Whilst I was speaking, I realized that could be a nice counter trade to get some bait. I'm just focusing right now on this area here. You see we have a volume stop, and by the way, when you switch off the imbalance line, you see a very nice divergence here. So the price traded at 36.78 and came back at 78 again, but with less conviction. That means the volume was less than traded here before. The price dynamic plot is relies on Bookmap. There have been more support here on this end, but anyways, for some reasons the market is still going down. It indicates more support. I'm very cautious if we have a low liquidity, and seeing this band is going green. There is a support on bid, but there's not enough support to stop the down move here. Let me have the VIX. The SPY is as well an interesting level here. SPY is as well at an interesting level here. High volume traded here into 3067, and the liquidity is still sitting 366 here at this low here. Liquidity comes up at a VWAP 369 in SPY, but most likely the 366 is maybe a good target as well. Imbalance is on the bid. There's maybe no chance at the moment for an retrace. That's the area I mentioned in the prep work, 3680, 3680, 3670. If they break down there, then it's most likely to trade into 3650 and then 3600. Let me have a look here on the chart. Yeah, 3650 is still in. Then 3600. On the upside we have 37. Yeah, that's far away. 3740 and 3770 a little bit. Still gives us a little bit hope. Yeah, it's just a glimpse of hope here. You see how they cancelled the liquidity at 3705. So they simply don't expect the price coming back here. Still supporting. I'm now focusing more whether I can see something where I would like to put my money on. As well, the SPY sideways. High yield bonds are as well sideways.
Tick new high.
ADD is hard down. What's interesting right now is that the tick is trying to recover a little bit. So the market is a little bit more, or tries to buy, to come off this low here. That's a fourth touchdown of 36.76.75. You see we have had a high volume here traded into 36.78, and then lower volume is trying to push down or push through this level 76.75, 76.75 again, the second time here and the third time right now. And as well, keep in mind, this is an institution levels. I'm sure you don't have. I'm not sure. No, I don't know. But watch it. It was in before, long before the market opened. Nothing hindsight here. Nothing in retrospective or whatever. It's all live. What we see right now is following. What we see right now is that this guy is coming up at 36.65, 36.66. Let me draw another this institution level. We have a handy, nice tool called Price Alerts in TradeFinder, and just to give you the chance to draw important line for you very easily to attach alerts to those lines, to change colors, to simply keep you on the chart. You see, I don't have much on the chart here. I have only TradeFinder, and this is the only signal I've got here. Now, based on this conclusion, I can trade long here. I should have traded long. I tried with 74, but I didn't get a fill here because the market went up very fast. And I have the imbalance tracker, which is on the bid at the moment. That's all. $36.66 was in before, long before the open, and now this guy is placing the liquidity at 36.66 exactly. So if you watch this institution levels, it's simply amazing to see that. You see how they are trying to support. This is greenish, greenish, greenish. This the price dynamics plot is I'm using for the price dynamics plot. I'm using. Let me show you what I'm using for my settings. the size variable and the style is combined. That means I want to see this band, price dynamic plot, this band as a variable. I want to see if it expands, the volume is higher. If it contracts, the volume is lower. If you have an highlighted color, then the volume is higher. If you have a light color, the volume is lower. So on normal days when the market is not rushing down so hard like today, meanwhile the market traded 156 and 60 points as a daily range today, 156 points and 3/4, 156.75. They're still trying to, as well, keep in mind it could as well be a kind of accumulation area here. I'm trying to catch this 74, but it's extremely fast. I will give it a try for a long position here. Oh gosh, I have the wrong contract here. I have to restore my PC yesterday, and therefore I have already had the wrong contract. Okay. No, I was looking for this area here, 76. I had a and the price entry system for my TWS was with a wrong contract. You see, that was my idea for a long position here. You can't, Captain is, if you look at 65, technically it's gonna be a level for expanding wedge. If it gets there today on short side, can be. But right now I can't predict it because it's still rotating 89 node. It is on consolidation till breaks up 90. Yes, can be. Plunge protection at 3%, maybe 2. Yes, can't let it down more than since conspiracy. We don't know. That's simply an assumption. And my intention was to go long here at 76. I waited for 74 because simply my price letter was with a wrong contract, so I switched to 09 September contract. I told you that was a long position here and tried to go long here to demonstrate how powerful this system is, our system is. You know, you can't predict everything here. You can assume everything here. That's what I don't want to speculate. It is a wedge. Yes, it is a wedge, of course, and there's a statistical examination, and there's a statistical numbers about how they are working and where they work and how they work. But anyway, I'm relying on facts, and fact one is we have here an institutional level. Fact two is we have a volume stop here. That means a huge volume was traded here. Fact three is that this was a very high volume traded at that point here at 36.78. Fact four is we have lower volume hitting the 76 area, 77 area. Fact five is they are all the time trying to challenge 76 but with less conviction. And fact six is that this is bounced off 1, 2, 3, 4 times off this level, and you see the liquidity there. They added, they supported, they supported, they supported. So these are simply facts. I don't think that is something we should. Yes, we need stories, we need narratives. So that's our human being. That's how we work as humans. But I'm trying to switch all of this narratives and just watching the market. I have 5 facts to go along here. It's simply unbelievable. It's simply unbelievable that everyone is expecting to go the price to going lower. But to me, it was a buy. Simply, if I've got some points, I call it bait, in my pocket here. That was, to me, it was obvious. And then 65 came up here at that point, exactly at the institution level. See if you have something in your on your chart at 36.66. And then the next fact is they cancel the liquidity here, they cancel the liquidity here, they cancel the liquidity here. These are undeniable facts. Because we are used to watch candles and watch what is happening on candles in different time frames. Yes, we have completely different views on the market. In one of my first seminars, I'm always giving a chart, a candle chart, to every of the participants and let them comment the chart. And the outcome is quite interesting because if you have 10 participants, you will get 10 different opinions about the chart. And that's interesting. That's a really nice study. But what we need in trading is simply to rely on facts. If we understand the market mechanics, we don't need to guess. Yes, for example, 5 times, Mr. Captain Price. At Elementary Trader, yes, it must be. So if you got Rithmic, please uncheck aggregated data. It's a very common mistake. And by the way, if you're watching Icebergs, I tell you we have the best Iceberg engine in this trading market. You see there haven't been any icebergs here between 20, what is this, 10:20 Eastern time, and what is this here? Let me have a look here. 22 or 23 here. Simply watch it. You don't need numbers on your chart. That's what we want to see, the extremes. We want to trade. We don't want to guess. Therefore, my intention is to tell you, be relaxed when in trading. Try to be relaxed. Don't speculate. Watch what the market is doing. That's the best way. You see, even if you take this 91 short, it's not a big deal here. 91, what gives you back maybe 1-2 points, but you are not in a losing position. You are not, in this case, up to now. The market can go against you, of course, here. But if you see, tighten your stop. If you see that the market is not going further down, it takes time. Tighten your stop. Go break even or take 1 tick just to cover your commission, or 2 ticks just to cover your commission, and then you are good. You're better off than simply blindly following the market and not knowing what you do. This market volume stop was here in time. There's nothing else. They're retesting. You see the nice divergence here as well. I'm trying to focus and concentrate myself to get a trade here, or when the market gives me the opportunity. Elementary trader, if you have Rithmic data, you will see everything on chart as I have here. So please contact support at TTW-TradeFinder.com. We can use TeamViewer to have a look at on your on your installation. Or you have to go through the hidden order settings and then please check everything as we recommend. By the way, you will find the settings in our room and Discord room as well. And secondly, go to the download configuration file here. Look here. This is our page, TTW-TradeFinder.com. There's an instrument configuration. Look at the instrument configuration page, search for instrument, and then please follow how to install BMCS files in Bookmap. Follow this few instructions here. It's really easy, and you will get them same settings as I recommend for ES at the moment. Someone asked, I can't go back here because I'm really trying to concentrate and show you the power of the TradeFinder by trading myself. And you see this green price dynamics plot, green price dynamics plot, green, 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 green here, a little bit more reddish here as well here. And you might wonder why the price is not going up immediately, but you see how they are trying to support this level here. That's not a guarantee that the 77, 76 will hold. That's not a guarantee, but you see how they are supporting as well. By the way, at I think it was Mr. Captain Price I talked to, that was the sixth fact why you should consider long here. That's all you need on your chart. Nothing else. Clean, concise, gives you everything what you need for, for trading. And that's not only, I'm not talking about ES. You have the same in NQ for cryptos, treasuries as well. Interesting though is to see that 76, 75 comes up again. I'm trying to chase. Yeah, I don't like to chase this stuff here. You know, my motto is if a trend becomes obvious, you are too late. And I'm totally a fan of this motto, because when the trend is on the way in either direction, you are too late. I mean, if you are trading Elliott waves, then it's important to catch the wave 3, because everyone recognizes that it's the wave 3. And this is the reason why the wave 3 in Elliott waves theory is so popular. It's a fight, yes, between 90, 91, and then 75 is again up. You remember 75? 78, 75, this area. You remember what happened? 1, 2, 3, 4, 5 times here. Support, 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 support. Sell point. 92, 91, 92. And that's how you can get the tops. And if you're spot on here, if you're in the saddle, then you are in total control of the market, and you're total control of your trade, not the market, excuse me. You are in total control of yourself, of your trade, and your confidence. Yes, but there's no, at the moment there's no absorption, nothing. I'm quiet right now, just observing the market. There's nothing to add. Simply, I'm explained to you a lot how I'm reading the market, and I'm totally relaxed, guys. I'm really totally relaxed. That what I'm missing right now is simply the concentration, the focus on the market, because of speaking, conducting, and answering, and so on. That's a little bit a challenge. It's not a little bit. It's a challenge. So I'm trying simply to focus on the market. Therefore, I'm a bit quiet here. You see how powerful the system is. I told you to go long here. I tried to catch a long here. And the second one, I was trying to catch a short here at this point. Okay, elementary trading ways. Great. You don't need a ES, the micro ES. Just watch the E-mini ES. If you want to trade micros, then you can do that in your whatever chart you have. You can trade micros and watching the E-mini here on chart. Oh, come on. Elementary trader? Is there a reason you're going to ESU? The question is, yes, it is because this is the September contract. We have had the rollover last week, and I think today or tomorrow is the last trading on the EM. And by the way, watch the volume on the M2 contract and the U2 contract. Sorry. My recommendation is to roll over 2 or 3 days after the official rollover starts. That was last Thursday, and M2 will stop trading, I think, tomorrow. Yes, Jim, that was a really great trade at 91, and it was indicated here in the book by TradeFinder's volume stop long before. Yes. I think even on Thinkorswim you should use U2, please, because the rollover started last week, and M2 won't be traded, I think, from tomorrow on. There's a lot of information, maybe barchart.com, if you know, go to barchart.com and compare U to M, and you will see the U2 contract is trading with far more volume than M2. M2 is done, I think.
Tick new high.
Let's have a look on the broader market. So the ADD recovered a little bit from minus 2,700 or 600 to minus 2,650. A little bit, a really tiny bit, but that's not simply worth mentioning. And VIX is still rising. We are about 32.50, 53. Cash is down, ticks are down. This market is simply down. Down at the moment, we must say. Yes, pressure's down. You see that on the imbalance is still on the bid. There's nothing on the ask. I called the long here around 75, 76, and then the short at 90, 91, 92. This area here. There's a strong selling. There's really strong selling right now in the market. And you see how they are positioning themselves at 36.50 here. The expectation is more downside. This is not a bullish day, although you can, when you understand the mechanic and when you understand what we have developed with the TradeFinder, you can do a counter trade. You can do a counter trade, but the TradeFinder indicates very well if you come on. When you have to be very, yes, on your toes, when you have been very focused on the market here, you can do a counter trade for 10 points here. But keep in mind the market was always on the downside, and the imbalance is flipping around a little bit around zero here, but it's still it's still blue in this case. On my case here, it's still down. That means trade pullbacks. Everything when the balance is on the bid as well on the ask, try to catch a pullback and then trading in the direction of the imbalance. You see the relative liquidity was cancelled, was added and cancelled here, minus 300. That's liquidity in the book, and they added liquidity at 36.55. The idea is that there may be trading around 36.65, 66, but I am just not waiting anything here, just watching what happens and waiting for my signals. That was a smaller iceberg of 222. We have seen this 222 icebergs all the time along, and then downtrend market might be a kind of hedging. I'm sure we will see more 222 icebergs coming up or being traded here on chart. Oh, now that's quite totally interesting to see. Another iceberg, 317. The iceberg, the order ID was placed here at 10:43 a.m. Eastern Time and executed here. You see how the algo lifted the order ID to get this 317 icebergs. Let me have a little bit more detailed look, and this is label here. Yeah, you see that? Actively they have been 194 traded, 123, that means in some 317 icebergs have been traded here at that point. That might be a kind of, I would switch off just to avoid too much or too many symbols here on chart. That might be, you know, the point here with this icebergs is the market is down, and based on my experience as options, yes, trader, and as I know the options industry, how they are working, that might be a kind of hedging here. So I don't know when someone is telling you we know how to trade icebergs and what do we, how to trade them and so on. Be very cautious with that, because there's no flag into an order ID which says this is covering, this is hedging, this is buying, this is selling. There's nothing we can say about that. Just we can conclude based on the price action and based on your experience as a trader. As an experienced trader, you might know, you will know there's this kind of hedging here. That might be a kind of hedging here. And by the way, you see a lot of, on the hidden order plot, a lot of icebergs on bid. A lot of icebergs on bid, and the market is still trending down. There are more sellers than buyers. There's no bid at the moment to support the market. You see this here in the iceberg plot here on the downside. Here. And the market is still down. So make up your mind and make your conclusions based on that. That we have a lot of icebergs on bid. A lot of icebergs on bid. That means normally it would say that's support, but in this case it's not support. It must be something else. Elementary trader, your simple definition for iceberg. I don't know what you mean by simple. I did an iceberg video. Please go through the, take your time. It's really in-depth education about icebergs and how we treat icebergs and how icebergs are defined. Please go back to our TradeFinder, TTW-TradeFinder.com/video page. There's really helpful information for you about icebergs as well, imbalances as well, and market volume and liquidity as well. You see these icebergs here. Where's the support? So we have to read these indications, these informations in the context of the market. We can't say this is a support, we must buy here. Isn't this remarkable? Look here, 222, 317, 222 here again.
Tick new high.
So ticks are up. Ticks are recovering a little bit here. ADD still down. Wix is at its highs at 33.21. Keep in mind that market opened gap down today. Don't be surprised if the market goes 100 points up here. I mean, it will be, but the market and the aggressors can do everything they want. Now that's a battle between two icebergs here at this point. So this part here, the price is still serious. On some days it can be extremely boring, you know. I think some of you, including myself, I was really impatient in my trading when I look at the candles or whatever I have, or still have and had. So I'm just waiting for the sweet spots, and we have had two, at least when I was aware of, two sweet spots here to trade. The one sweet spot was the 76 area here, 77 area, because of 5 facts we saw in the market. And the second one, the best one for today, because the market is still down, was the short of 1991 here. Try to catch this trade here at that point. I didn't want to chase it. It doesn't matter. So that was called before. So I didn't took the trade because I missed the entry, because I want to be at the top when the market starts here. That's my motto, that's my style of trading. No speculation, facts-based trading. And therefore, I'm saying, just if you want to be happy in trading, stay relaxed. Don't chase everything, don't force everything. Don't speculate. There's a question that came up. Could you go over the difference between the white and red boxes? White. Okay, I think you mean. this is a market volume stop. This is a market volume stop on the bid side. That means, and this is a market volume stop on ask. All market volume stops, white, in this my case white, you can choose your own color, and red, are an indication of exhaustion, where the highest volume was traded. It's a kind of, yes, exhaustion, liquidation, whatever, however you will call it. And this is indicated by TradeFinder when the market reaches the highest amount of volume traded. And when you understand the mechanic of the matching algorithm, CME matching algorithm, maybe you hear that for the first time, but it's real. It's described on cme.com Wikipedia. What we see here is a dual auction. The price is determined between two parties, not individuals, and maybe individuals as well here because we are trading this market as well. But this is a price auction mechanism which defines the price between two parties, and therefore an auction is needed. And this auction is conducted by the CME matching algorithm. There are several matching algorithms. You should, I'm saying you should know that. And when you understand that in the auction algorithm, you will see that this volume stops here and here are points where the market traded the highest volume, or yes, stops here, highest volume, and then the market exhausted. And then I can't do this right now because we are over the time, and I will give you an homework. I will give you a homework. Go through the cme.com Wikipedia, read about the matching algorithm, and the matching algorithm then if the market is exhausted, no more sellers, no more buyers, then the matching algorithm must trade back or auction back, up or down. And this points, I call it sweet spots, we are trying to identify as good as possible and then take our action on that. In this case, long, as I mentioned long before at that time, and a short, as I mentioned at that time when the market traded in 92. I don't know what to say about icebergs. Please go to my video. Who was it? Viviana. Juliano, it depends on. If you are aggressive, you will go the first time. If you're not aggressive, simply wait for retests. For those of you who are not aggressive or wants to get who wants to need a retest of this signals, please be patient and wait for a signal for retest, for example, as a confirmation. Yes, if you need a confirmation signal, wait for retests. Okay, guys, It was great to be with my friends here, TTW and Friends, with Moby and David today. It's always a huge fun to talk to our friends. We have had a quite interesting day. It was a down day. I had two virtual trades. What I saw, the first one was a long off this volume stop here around with a retest 5.4 yes, retest here, and then a virtual sell at 36.90 as well. There have been another opportunities here as well. The same, you see the same pattern here, the same pattern. That one that wasn't so, it wasn't perfect, but anyway, we will never reach a perfect yes, 100% achievement in the market. Excuse me. And the second one was really the best one. So as one Juliano, you see that it's a retest here. It's a retest. It's a confirmation. If you don't want to take this one, wait for confirmation. I'm sorry for that. So wait for confirmation. There is no need to rush. Simply, if you want to be a happy trader, simply wait, be patient. The second one was here. You see always the same pattern. It's always the same pattern. Your only responsibility in trading is to be patient and to wait. Don't speculate. I know we need narratives. I know we need stories. I know we are looking for, yes, as Captain is saying, we need for repairs. We are looking for levels. We are looking for where the price might go next. But my style of trading is I don't want to be a part of that. I know Dalton. I know Steidelmeier. I know all this stuff. I know Elliott waves as well. I know footprints. I did it all, and I admire Dalton. However, I relying on facts, and facts are what I see here on my chart. The market is still vulnerable. This market is still weak. The market, when I look at the different indices, when I look at the SPY, when I watch the broader market here,
tick new high.
When I watch the broader market, I see a little bit more relief in the ADD. The broader market is coming to to extremes here, but it's a little bit more relief than before. The VIX is still extreme high, 33.52 reading. The ticks are below zero. There's no hope for higher prices right now at this moment. That might change in the next minutes. This is not written in stone that the market must trade into 36.50. This guy sitting at 36.50 might be wrong as well. So you see simply how these institution levels are working. They are trading around this level. So I don't know why and how they are doing that. But anyway, it's simply an observation, and I rely on this observation here because I'm watching that since for 2 years now. And that's simply fantastic to see that. My advice for you, since I won't be around next week, my advice is relax. Don't think too much. Don't speculate. Don't guess. Let the market tell you what the market is doing right now, and you will see, based with the help of TradeFinder, really exactly what the market is doing. It requires more education on that. It's not a simple signal system where you get the signals and you buy and sell. That's not possible. That's not possible in trading. That's not possible in this industry. There's no holy grail. The learning curve is a little bit steep, but if you understand how market works, the market mechanics, you will become a happy trader, I'm sure. Yeah, Captain Fry's works. I even know some believe in moon cycles. Again. Yeah, Elliott is not bad. I'm sure Elliott worked years and years and years ago, but the market changed. You see, we have a liquidity of 70 or 80. You see the algos are predominant in the market, or dominant
Tick
in the
new
market.
high.
Are dominant in the market. And that makes this human behavior, which Mr. Elliott observed and found out it's less than it was 50, 60, or maybe 100 years ago. That's how the market changed. That's the evolution of the markets. Okay, ladies and gentlemen, thank you very much for being with me, for being with us, and with our friends here. I'm really happy to help you and to show you how trading could be. I'm offering, and our team, Trading to Win team, offers you an alternative to the markets based on TradeFinder, TTW-TradeFinder, and Bookmap. I would like to encourage you learn a little bit, learn more. You will find a lot of information on our page TTW-Trader.com around TradeFinder and writings as well, videos here on YouTube on our channel and as well there. Please subscribe. Please subscribe to our newsletter. I'm not spamming you. I'm really not spamming you, but I will keep you informed about upcoming events, changes, updates, software release updates, and so on. That's the only reason we are sending out our newsletters. We don't want to spam you, and please subscribe to our info letter or newsletter at ttwtrader.com. You will get the latest updates on software, on the next events we are planning with our friends and together with our team here. So I would like to encourage you to do so. Thank you very much for being with me again. Have a great day. Have a great weekend. And next week on Monday, there's I think a holiday, banking holiday or something in the States. I will be 1 week off and then again back in 2 weeks. Thank you very much and bye-bye.